we're accumulating silver, and I'm expecting at minimum a 20-to-1 ratio of silver to gold, but probably 10, which means you can still outperform gold by about a factor of 7 times. That is huge, especially if gold doubles, triples, quadruples times 7. Well, I started a series called The Death of the Global Dollar Standard back in 2009. And I was tracking all of the events, chipping it. I called it the nails in the coffin of the global dollar standard. And these are potentially huge nails, but it's not going to happen like all at once until it does. It's a slow whittling away at this, and it will happen. But, George Gammon points out that the dollar, it's like cell phones. The dollar has all the apps, and the other currencies don't. And that's the reason the Indian rupees were useless in Russia. Now, this triangle works, except it would be limited in trade to the amount of oil that China is buying. China would not want a bunch of excess rupees. So it has a cap on it. It's not like the dollar, but it's another huge nail in the coffin.
Exactly.
According to Mike Maloney, silver has a massive supply-demand imbalance. Demand from EVs, AI, solar, and modern tech is exploding. Supply can't catch up, recycled silver is gone, and central banks are buying again. Price is the only fix. Silver could outperform gold by up to 7 times. Thanks for watching. Subscribe to Find Metal for more updates.
Why did you ever stop doing the nails in the coffins visual? Is it because there were just nails every single day and it was impossible to keep up with so many of them?
I tried to update that without building the whole thing new from scratch. And actually, if anybody knows Keynote or PowerPoint, if you put too many moves and images that are clicks in a frame, and then you want to try to modify it or change it in any way, you remove something, and it just became a total nightmare. I stopped because it was too much work for me. I'm not, I'm dyslexic. And I just don't have the patience. I've got a lot of patience when it comes to my investments and stuff. But when I'm working on something and it breaks and I got to start over again, and it does that 2 or 3 times, forget about it. So someday I'll put it back together. There were actually the assistant that had initially put that together put too many minute nails in the coffin. And I don't want the little finishing nails that you do cabinetry with. I want, big old framing nails.
Gutter spikes.
15 penny and 10 penny, big, huge nails. I want fewer of them, but really important stuff. And so we'll redo it sometime or another in the future because it's getting closer and closer, and it's all coming true. Everything that I was talking about since 2009, they all compound on you. Say you have to move that white line a few months. They're the first area where you said that was the rupee, the lower line?
Well, it's the exchange rate between the yuan and the rupee, the lower line.
Okay. Yeah. That's a little choppier than silver is, but it's a very interesting combination, but correlation is not necessarily proof of causation. India buys oil, pays with AED. Where did they get the AED? Does the United Arab Emirates take unlimited quantities of rupees? And what do they do with the rupees? That's what I would want to know.
That's a good question, and I do not have the answer for you. But right. That's exactly, economics is a closed loop, right? So it's got those rupees
exactly.
have to go somewhere.
And this would be another. It isn't just China's ability to absorb the AED. It's the United Arab Emirates' ability to absorb rupees, and we just this started with Russia's inability to absorb rupees, and so the whole thread started with that. Exactly. And so I would think that applies elsewhere as well.
Silver detached from COMEX pricing, I don't think so. I don't think so. I think COMEX is
No.
still following the price of silver.
That's the price. When you look at the spot price, that comes from COMEX.
Exactly. And so if
I,
that,
I missed they made that statement. This is a very good sort of investigative reporting and trying to associate things. I think he's done a spectacular job. But that particular statement, I would say, is not true yet, but it will be someday. If you look at the history of India and their tariffs and so on, the duties, um, they go up and down, and they've changed them over the years. I don't know. It could be an absolute coincidence that date. Looking at that first chart, I just don't see the absolute correlation when they put that line on the chart. I see the correlation starting several months later when they both start rising at the same time. One is going, yeah, one is somewhat flat, and then the currency pair is jogging up and down like that. Second time that it falls, I don't see silver falling that much or a sustained fall. It does one pullback in there. Right. And so I don't see the super high correlation. But if you go down to that bottom of the currency pair, the final bottom, there's a very high correlation after that. Anybody should be able to see that. If a government says it, it's never the full story.
Right. Yeah, never believe something until it's been officially denied.
Right. It's like, exactly. Yeah. If it's the government dealing in silver, the tariffs wouldn't apply. This is for the public in India, the tariffs, and so cutting them would have absolutely no effect on this triangle of payment system. That would be duty-free or tariff-free anyway. So cutting them encourages the Indian public to buy more silver, which is great, but I just don't see how that policy shift affects this this theory, this proposal.
About $500 million annually for 3 years, this year and the next 2 years. So $500 million. Yeah, that could probably get you 10 million or so.
There's people that can afford that. $500 million is not that much for a central bank or for a government to be buying. It's like saying if the Federal Reserve wants gold, they'll encourage American citizens to buy gold instead of them creating the currency and buying gold. Because when they buy an asset, the problem is the Federal Reserve Act limits them to assets that are guaranteed as to the principal and the interest. They've got to be an interest-bearing asset that is federally guaranteed, meaning it comes out of your taxes. And then they can type brand new currency into existence and buy it with that counterfeit currency. And the counterfeit currency is then in circulation. So that's where all of our base currency, the bank reserves and the cash in your wallet come from, is the Federal Reserve counterfeiting currency into existence.
Yeah.
But the fact that central banks are starting to accumulate silver, that it has started, there's that silver is going to be added to gold as a reserve asset, a collateral. And so some of this is absolutely true.
Gold is going to maintain its role. It's just the role of silver is elevating. So
yes, it's sort of becoming a bimetallic standard in central banks now. But the U.S. used to have the world's largest silver stockpile, the Strategic Silver Reserve, and then they got rid of it, and most governments got rid of it after we went on the international gold standard. Silver started to become demonetized, was relegated to coinage and some small promissory notes, silver certificates, and then totally abandoned. And then they liquidated the strategic stockpile that was for war and everything else. And now they're realizing, oh, we made a mistake. And so they've got to accumulate again, because you cannot conduct warfare. You cannot, we're in a technology race right now with China, and you cannot conduct a technology race without silver. There's just so many things that where silver is absolutely required, and gold is not. That would be like a secondary option to silver with the conductivity and everything. And then all of the industry that relies on silver, practically everything has some silver in it. This fundamental supply-demand imbalance has to drive the silver price, because this has to be corrected, especially with even greater and greater silver consumption in the future. And what we saw is in 2011, silver hit $48, and there was a structural deficit back then. And it persisted for like the next 5 years and then went positive. It takes about, for the mines that already exist, that have been high graded and closed, new prices make the less mineable ore, the ore that has a lower percentage of silver in it and doesn't pay to mine. Sometimes miners will do what's called high grading. You've got a core deposit, and there's less and less silver in the ore as you go away from the core. And they'll do what is economically viable to survive. And that means at low prices, you only mine the highest purity stuff, but you're leaving behind a lot of silver. It's just more costly to refine than you can't make a profit on it. And so they leave that behind. But then silver explodes, and now it's profitable to go back and get it. Those are the mines that can start adding to supply in just a few years. They have to take a mothballed mine and get it back up and running, but it's already been through the permitting process and the Environmental Protection Agency and all of that stuff.
Solar panels here is a proxy for industry. And
it's all of these things together along with what he is proposing, because those things that he just named here did not stop. They were there before. Silver is, gold has been rising for a while. People are concerned about the economy. A lot of this is investors. So silver is starting to act once again like money. People are protecting themselves with it, and they are making gains with it. And the solar panels as a proxy for industry, batteries, I've been driving electric cars now since my first Tesla was a 2010 Roadster. And my second was a 2011 Roadster. Then I had the 599th Model S off the line in 2012. And I know electric cars are superior. And I used to give people rides in 2012 and 2013 and saying, you just know in 20 years that 80% of the cars being made are going to be electric. And the people that sort of pulled out of the electric race, the companies, they're going to end up dying. They absolutely are. I'm going to get a lot of flack in the comments from this, but they absolutely are superior. There's just absolutely no comparison. And when I drive an internal combustion vehicle, it feels broken. But the demand that this places on silver is incredible. A worldwide shift to our transportation infrastructure being made up of mostly electric vehicles. This is absolutely enormous, and we do not mine enough silver. And so the fundamental supply-demand imbalance is one of the big drivers here. And so, but those aren't that many. All of the new prospecting that's going on and finding a claim and turning it into a mine, you're talking 5 to 10 years is like a minimum. And so I'm not expecting to see this to go into surplus until at least 2030. But by then, the demand is going to be growing so quickly, especially with the server centers and the demand for AI. This is going to be growing very quickly. Silver is probably going to remain in a fundamental deficit. So above ground stock, the amount of silver available for industry to buy and investors is going to keep on shrinking and shrinking and shrinking into the early 2030s, most likely. AI is going to be exploding, or is that down in electronics? Either way, what we see is if you look back at the year 2000, all the bars except the green bars, well, the dark blue bars are also about the same size, or even smaller today. But solar panels, look at the rate of growth there. The rate of growth of electronics and batteries has been slower, but that's going to explode. And we are done with photography shrinking year after year. When digital photography came out, it really wiped out. But the thing that they don't say in this graph, that green line, even though there's less silver being purchased from the market, there is also less supply because all of that photography, this is for the negatives. The film stock has silver in it. And I can't remember if there is silver in the developing solution, but all that silver gets recovered and comes back to market. So it was stuck in this loop. So that demand was also supply. That is sort of done now. X-rays had silver in them. That's all been, so like 85% of that photography demand was also supply. It came back labeled as scrap. Point of that is that that's more supply going away. That green line going down isn't just demand going down, but it's supply going down. The only thing that can set that in balance is price. And so the price has to go up. It's just a fundamental law of economics. And so silver, everything has to obey these laws eventually. They can break the law for a little while, but they always get caught. Jewelry has been a little bit static since 2000. And as price goes up, jewelry and silverware will shrink because it's getting more and more expensive. Well, actually not. People buy gold jewelry. So as silver becomes more prized, there's going to be a lot of silver necklaces and stuff. But I would expect batteries and solar panels and other uses to absolutely explode. So this chart, there is no way for this, no direction for this chart to go except north.